Welcome to TradingPennies.com Chart of the Week, where every week we will examine the trading strategy behind one of our free daily stock picks. All the strategies presented within this series are covered in detail in our manual, Learn How Professionals Trade the Penny Stock Market, available on our site at trading-pennies.com. This week's chart is DNAG Genomics, ticker symbol DNAG, a diagnostic substances company within the healthcare sector. What caught our attention was a potential consolidating-based breakout play initially seen in the daily chart. Since 2006, DNAG has been in a long and steady decline. In June of 2008, the stock had apparently found a base that extended in a quiet, small, and volatile range throughout January of 2009. Unlike many penny stocks that fall out of favor, DNAG's average daily volume, though, although churning, remained remarkably high. On the weekly chart, DNAG was basing along the relatively neutral or flat 20-period moving average. In January, the only other significant moving average was the overhead and descending 20-period moving average on the monthly chart. And of course, the dramatically overhead descending and converging 200-period moving average on the daily chart. Since moving averages represent significant technical markers to 50% of the general trading population, these moving averages' proximity to current price volume action of a stock have to be taken into account. The angle of the descent of the 200-period moving average on the daily chart posed a decision for buyers and sellers alike on the long-term basing stock. Bailout, or hold on to, was the question. DNAG based right through it, exhibiting no volatility whatsoever at this convergence. This stock was virtually a zombie and went unnoticed unless you looked at multiple timeframe analysis. If you looked at the daily chart, as DNAG passed through this 200-period moving average convergence point, quiet and subtle volume came into the stock. As sectors go, the healthcare sector is currently in the midst of forming what appears to be a handle of a cup and handle pattern, which is a favorable pattern for a potential sector breakout in the short term, and the stock in this sector, therefore, tend to be in favor. Since the rising tide floats all boats and DNAG was within the sector, the daily chart price volume activity was interesting, and which caused us to place it on our watch list prior to the open on 1/27 of 2009. If you had the opportunity to have the stock on your watch list, which we posted on our free explosive stock picks list on TradingPennies.com prior to the open on January 27th of 2009, you would have seen a tremendous volume spike that accompanied the breakout of the high of this long-term base. This is one of our buy signals we look for, and explained in detail in our manual, Learn How Professionals Trade the Penny Stock Market, available on our site. Our interest grew as what we saw was a quiet ascending base along the rising intraday 200-period moving average as it neared the high of the long-term base. We quickly took position as it broke out of its slumber on significant volume and the price expansion of 150% that followed shortly after 10:30 a.m., and this netted us quite a tidy profit. As stated in our last instructional video, as well as our manual, once in a position, our attention quickly turns to our exit strategies. As with any stock, we look to potential overhead resistance levels on multiple time frame analysis. For example, we look for open air above our entry point. In this case, we're looking at open air in the monthly chart. We look to open air on the weekly chart, open air on the daily chart, and yes, we do in turn look for open air on the intraday chart, although this particular stock did not give us that example. We look for common price volume resistance levels. In this case, we're looking at resistance levels on the monthly chart, resistance levels on the weekly chart, resistance levels on the daily chart, and within the time frame that we utilize for this particular stock on the intraday basis, we also look for intraday resistance levels, although this stock did not present us as such. Another thing we look for are downtrending or uptrending lines or moving average lines. In this case, we're looking at the 20-period moving average resistance of the monthly chart. We also look for pattern projection resistance levels. In this case, this one is based on the daily chart. This one is based on the pattern projection resistance of an intraday chart. We do look at these in both the weekly and the monthly chart as well, as though this chart did not present us those examples. As such, we look for major common resistance levels common to multi-time frame analysis. To this end, we looked at the 0.0029 level on the monthly chart based on prior strong price volume resistance levels and the current level of the descending 200 period moving average. On the weekly and daily chart, we saw the 0.002 as resistance based on prior strong price volume resistance levels. On an intraday basis, we looked at the 0.002 level as an intraday pattern projection level. All in all, the 0.002 level was too significant a resistance level to hold position, and we viewed a breach of this as gravy profit-wise and a good place to distribute the majority if not all of our position, which we did at 0.0019. Not a bad day. If you happen to remain in position, the gap up at the open after a significant price move with an accompanied gap down break of the intraday 200 period moving average support level that followed shortly after should have told you the move was over and the stock was damaged. If you look at the price volume action that followed, we made the right decision. We hope you did too. From TradingPennies.com, where our goal is to help educate you on how to successfully trade the penny stock market, I'm Thomas McClellan. Take care.